Welcome back guys to my channel, and I'm ICT Concept again. Today I'm going to describe about the breakaway gap. I was thinking that it is very important for you guys to know about the breakaway gap. If you really know what is breakaway gap, it will help you to place your stop loss, as well as you can calculate your lot size as well. And so explaining about the breakaway gap, I'm using my journal. When I have first started to learn about the breakaway gap, I did some journal. I took some screenshot. I wrote down everything to that screenshot, so that later if I'm confused, I can go back to my journal and I can, revised it. And I'm thinking that this should be the best example for you guys to understand the breakaway gap. And please watch until the end. That will really make clear about the breakaway gap, everything to you guys. So be patient. And I'm gonna give you two example about the breakaway gap. There's two type of breakaway gap. I mean there is two places where the breakaway gap can happen, so I'm gonna give you both of them, and that will, I think that will make you clear everything about the breakaway gap. So this is the NASDAQ chart, and you see this is the 5-minute fair value gap market. I've actually marked this relative equal high, and this is the hourly fair value gap. This two level is the hourly fair value gap. This relative equal high, that is the important level, whereas in anticipating that price would go, it has cleared all of this liquidity, came to the 5-minute fair value gap, also the order block. You see the last down close candle, this is the order block level. Market just tap over there and boom. So let's go to the 1-minute chart directly. So I do not want to talk about anything here. I just would like to describe about the breakaway gap. You see market just come to the 5-minute fair value gap, and this is the order block level. So when it has traded, go back and come back again, then little bit consolidate over here and gave me the market structure shift. This is the fair value gap. In that fair value gap, you will take your entry. This is the classical YT model, 22 YT model. The main thing is price actually traded the higher time frame 5-minute fair value gap. So 5-minute is higher than 1 minute. So that is the thing. It has to trade the high time frame fair value gap or somewhere. Then give you the model. That means the setup entry. This is the order block. Why this is the order block, I will explain it later. When I will give you the second example, you will understand why I marked this one as a exam order block level, not this one. You will understand when I'll just show you the second example. So if you took your entry over there, you can take a partial entry over there, and you can add more over this fair value gap. Then market just went to the relative equal high. You see this is the relative equal high, and that was my target. You have to exit your trade over there. You can take one partial over there because this is the rejection block, and one partial over there. This is the swing high. There is a lot of liquidity over there, so you have to take another partial over there, and lastly you will close your trade over there. This is the breakaway gap. It shouldn't be trade. Why? When market has traded this high time frame fair value gap and gave you the market structure shift, and it has traded this specific this fair value gap. You see there is the lowest fair value gap. It has traded that. When it has traded that fair value gap, this is my order block. The last up close candle is my order block. Then market go away, gave me two fair value gap, 1 2. I was anticipating that this gap will be untraded. I'm anticipating it's because I don't know, I didn't know before price went over here. I didn't know that it won't be traded, but I was expecting that this gap will be opened, it won't be traded. This should be the breakaway gap. Why you do you need the breakaway gap? When you will see some portion of the fair value gap will be open, then you will be confident that market will go over there. That's why you will hold your trade, hold your entry until it closed the the specific point you have marked before. But obviously you have to take partial because nothing is certain in trading. But this gap made me confident that market will go over there. That's why it is important. You can place your stop loss just above the breakaway gap, or the more conservative people, they placed their stop loss just under the consequent encroachment of this breakaway gap. There is also a inversion fair value gap. This is sell side imbalance, buy side inefficiency. Here is the buy side delivered, and market just tapped to the upper level of the fair value gap, then leave. So this is the balanced price range. This is another reason for market not going lower portion, but I'm not talking about the inversion fair value gap or balanced price range. I'm just talking about the breakaway gap. This breakaway gap, it helps me to understand that market would come over here before clearing this buy side liquidity. So this is one example, and come to the another example. Here is also, you see the relative equal high. This is the E-mini chart. So here is the relative equal high. Market traded the 5-minute fair value gap. This is the higher time frame fair value gap, and this is inside the session. You see the morning session. This is the inside morning session. What happened over here? This is second type of breakaway gap. In the previous example, you have seen that market traded the lower fair value gap, then expand and give me the breakaway gap somewhere here. But here it didn't trade this gap. So how do you take entry? You will wait when you see it has cleared this liquidity, also traded the 5-minute fair value gap consequent encroachment, gave you the market structure shift. This is the swing high, there is the lower high, both of side of this high. So this is the swing high, market structure shift, and this is the gap. This is the 22 YT model. So you will expect that market will come to this gap first. When it will come here, you will take your entry. But if you see market didn't trade this gap and gave you another market structure shift, in that case you will mark instantly, you will mark the consecutive order block level. That means the wick high and the opening of this candle. You have to mark this two level. If you are aggressive, then you can take when market will come to the top of this candle, that means the order block level, you will take your entry over there. And if you are more conservative like me, then you will mark the opening. Maybe in that case you will miss this entry, but it doesn't matter actually. One bus went, so that also what, another 1,000 bus will come, so you will get another 1,000 opportunity to take entry or to take trade. This gap will be act as a breakaway gap, and that will make me more confident that market will clear at least this relative equal high. This is why this gap is important for me. I didn't know, trust me guys, I didn't know that it won't be trade, or it will trade, or it won't be traded. I anticipated that it will trade first. When it didn't trade here and gave me another market structure shift, then I marked it as a breakaway gap, and I'm pretty much confident that market won't come back to this gap. So I take my entry to the water block level and placed my stop loss just below the swing low, and my target is relative equal high. You see there is another water block level, also the fair value gap. So you can, if you would like to take another entry over there, partial entry, you can take that. This water institutional order for entry, that is another topics. Here is the breakaway gap, and if you see the breakaway gap happens to the lower fair value gap, then you have to take entry to the water block level. You don't need to, you can't wait until it will trade this gap. You can't wait, you have to take entry to the water block. You have to, otherwise you will miss the trade most of the time. I have seen so many times that market didn't go to the gap, it just trade the order block level and then just boom. So there is two type of, or whatever, a breakaway gap. You see the one, it actually happened to the lower part, and the another one, just a second, give me. So the another one, it happened to the upper level. That means when market actually trade the lower portion, lower fair value gap, it won't trade the order block level. You see this consecutive order block. So this is the order block level. Market didn't give you the chance to take entry or take partial entry over there. Instead of that, it has just gave you the breakaway gap, and the higher fair value gap, it has stayed over there and then expand. So that is the breakaway gap, guys. Sometimes it's really important to know about the breakaway gap, so that it will be clear for you. It will help you to uh, place your stop loss. If I took my entry over there and I saw this the breakaway gap, I will just move my stop loss just under the consequent encroachment of this breakaway gap. I will be, I'll be anticipate that market won't trade not below the consequent encroachment of this fair value gap. That means the breakaway gap, and I would be more confident that market will trade actually this gap. It won't come lower at all and then go back. And for the another example, When I didn't have any chance to take entry over there, I think like it is happening over there, market is over here, it has just gave me the market structure shift, it's coming back, coming back. I'm waiting to come to this gap, but it didn't come. So instead of coming to this fair value gap, it just gave me another, you see, market structure shift. When it has just market shifted, you see it went too far, actually traded to this gap and then come back. When it started to come back again, I won't wait to come back here or here to this gap, I will just wait to come back to the order block level. When it will come to the order block level, maybe the opening, maximum time I actually mark the opening level, so I'll wait it need to come to the opening level. Or if you guys a little bit more aggressive, then you can mark your order block to the top of the week. So when it will come to the order block level, you will just take the entry and your stop loss will be over here. It won't come back. It can trade this gap, or it didn't, it doesn't matter. This gap is not important anymore, the order block level is important. And that is all. And here, when I have seen that this fair value gap has traded and market just break this order block level, this high, this opening is my, if I would like to take some partial entry, I will just add some here. And if really I'm I need more money, then I will add some here, because this gap it won't be trade, because this is the breakaway gap. And here in this example, this gap won't be trade because this is the breakaway gap. So that's all about the breakaway gap, guys. I tried to make it simple and little, tried to make it short, but it's already so much time. But if you really enjoyed it and really understand what is breakaway gap and how to utilize the breakaway gap, give me a thumbs up, let me know in comment section. Subscribe to my channel if you are new, share my videos so that some more people can know about this channel. I'm just growing actually. And that's all, guys. Thank you. I will come back again with another topics. Okay, you can guys write me something, what should the next video about. So that's all. Thank you. Bye bye.